Hello and welcome to another video. There's a heat wave going on outside, but you can cool off with these two energy drink stocks. Several estimates predict that by 2033, the market for energy drinks will have reached over $111 billion, growing at a compound annual growth rate of 8.72%. So, I think amidst this, these two energy stocks are bound to dominate the overall sector. Over the past 3 months, Monster Beverage and Celsius shares have plummeted about 10% and 36%. However, this makes both these stocks a good buy right now. Even a silver of this market can be a lucrative endeavor, and Monster and Celsius have more than a silver. So let's talk about Monster Beverage first. It has over 37% of the global energy drink market and is a global leader. The company's revenue reached a monstrous $1.90 billion in first quarter of 2024, with an increase of 11.8% from the same quarter last year. And fun fact is, over the past 30 years, Monster's stock performance has been even better than Apple's or Amazon's. And if we look at the future, over the next 5 years, Monster Beverage is projected to provide a strong revenue growth of 10% annually and will have several strategic international expansion and acquisition initiatives. Now, let's talk about Celsius. It is one of the best energy drink stocks you can own because it offers tremendous potential for growth. The yearly sales of Celsius skyrocketed from 75.1 million in 2019 to over 1.3 billion in 2023. The projected revenue growth for the stock is 25.67% annually, more than 5 times 4.74% growth rate of the US non-alcoholic beverage market. And I do think, according to its valuation, there is over 75% upside potential for the stock. Adding Celsius and Monster Beverage to your fridge and portfolio might be a good idea. Even though the rapid rise of Monster and Celsius may be worrisome, but it could ultimately prove advantageous. Hey, it doesn't have hurt to have a strong fundamentals, right? I hope you like this video, and if you do have any questions, do let me know in the comments below.